Yeah, I would say, this is not a big surprise for the market, right? So it's broadly in line with the expectation. The economy, the momentum is still quite weak, particularly domestic demand. I think the deflationary pressure is still there, and the government is taking measures, but rather slowly. So I think it will still take some time to normalize the prices. So in first quarter, I think the economic momentum probably will stay weak.
How weak? Because, we were looking at just the trend on PPI, and every single month we've seen a negative print on prices on a monthly basis ever since October 2022. And that's like, obviously, we're talking about almost 18 months plus on that front. And so, do you really think that a big bazooka stimulus would address the problem when the problem has been so deep-seated for a while now?
Yeah, I hope the government will roll out sort of a large stimulus, right, bazooka in terms of particularly fiscal policy. But it looks like now the policy reaction is more gradual, is more sort of a, take one step and then see what happens kind of strategy, right? So the key concern in the market now is that the property sector in the economy is slowing down and has been going on for quite some time, and property prices even in tier one cities are falling. So without a stabilization in the property sector, it's hard to see domestic demand to improve in a meaningful way. Yeah, so we'll see. I mean, next week, there may be interest rate cut coming. Maybe there will be more policy measures in the pipeline, but I think it will take time.
Isn't it more scary, though, if this expectation for everything that Tanny was saying, everything that we're seeing in the data in terms of the sentimentality of households and the like and businesses gets entrenched? Isn't that what's more scary than even, I would argue, what's been happening in the property market now? Because there's been, sufficient, I suppose, little guardrails that have been put in place to shore up that. But if you have households, if you have businesses all expecting deflationary conditions, that once that does become entrenched, then you're careening towards what happened in Japan for 20 years.
That's right. I think the experience in Japan really, tells us that the longer you wait, the more difficult to fight this kind of entrenched expectation, right? So I think the policymakers in Beijing should be aware of that. I mean, that's actually quite well discussed in even publicly in conferences. So I think down the road some fiscal measure will be rolled out. But somehow, it's a bit puzzling why it's taking so long. But I have to say, last year, the end of the year, they revised up their fiscal deficit and they issued, a 1 trillion renminbi bond. That came as a surprise for the market. If they follow in the same direction, they do more in that direction, in the next couple of months, I think that would be helpful to stabilize the sentiment. But we need to keep in mind that this is a transition for China to become less dependent on the property sector. And China has been, the property sector has been a key pillar for the economy for many, many years, right? So this transition it's going to be painful. It's going to be gradual. And, in the longer term, it's a good thing for the economy. But in the short term, unfortunately, it does have, it caused some damage to the economy.